we point to the fact that having the people that create these mortgage securities have some stake in how they do, again, is going to provide a better private sector incentive. We also point to the credit rating agencies, and as we all know, they fell down on the job that they were doing. They rated many of these securities as AAA, even though the underlying risks were much greater. We think that's a difficult one to deal with. We certainly think there should be some firewalls within the credit rating agencies so that the people that are giving the ratings are not the same people that are creating these securities, and there's a sharp line between the two. But in general, we point to try and improve the incentive structure within the rating agencies. On the regulatory side, some of it is around the amount of information that's disclosed. In general, we say that if you get greater transparency, not only will that help the markets to work better, but it will actually help the regulators to work better to make sure that they have in front of them the information that's needed. Another point we make, and this echoes again some of the other reports that have come out, the Group of 30 and so on, is that it would be helpful to have a systemic regulator. What that means is that you may get a single bank go down, and that's not the end of the world. We've seen that happen over the years, that individual banks have gone down. But if that one bank going down brings down the rest of the system, as seemed to happen to some extent when Lehman went down, then that's a problem for the whole system, and we need an overarching regulator that knows what's going on in the whole system and how different banks are related to each other, so that if one bank is a so-called counterparty, in other words, it is guaranteeing some assets that belong to another bank in some way, then we're aware of that and we can take the necessary steps to make sure that the system itself does not become overloaded with that kind of risk. There's a danger of overregulation. There are tremendous benefits that have been achieved through the financial sector and through having the financial sector in the United States that is so sophisticated and so innovative. Right now we see some of the costs of having that sector, and we're all paying the price of the instability that's been created. But once you get through that, once we get through that crisis, we don't want to go back to a situation where we don't have derivatives, we don't have securitized assets, because those have allowed our economy to be what it is to some considerable degree.